Hi, I'm Joe Castriano, tax partner responsible for our wealth management tax services practice, and welcome to the first in our series of videos around UBTI for IRAs and other tax-deferred vehicles. The first video we have today will be with respect to the basics of UBTI for IRAs and tax-deferred vehicles. Our presenters for this video will be Shawn Hanlon, my partner in the wealth management tax services practice, and Laura Parello, a managing director in our tax-exempt practice. Shawn, over to you.
Thanks, Joe. And Laura, thank you for being here today to talk about unrelated business taxable income, or UBTI. So let's dive right in and let's talk about the three things that typically trigger UBTI.
Sure, and thanks for having me here today, Shawn. The three key trigger events for current IRA tax consequences are: one, income comes from a business that's regularly carried on, and that's whether it's not directly or indirectly. Two, income from debt-financed investments. And lastly, it could arise from a sale of a partnership interest. So basically, if there's income from running a trade or business, or if debt is incurred to acquire certain investments, like stocks and bonds, or debt is incurred by the actual partnership investment to acquire other investments, then that income is going to be taxed as UBI. Now, if no debt is used and the income is investment income, what I mean by that is rents, dividends, interests, capital gain, then that income is not taxed as UBI.
Well, that makes sense. But we're talking about IRAs here. So IRAs typically don't have businesses in them or debt, but sometimes will hold a partnership interest. So can you explain how UBTI comes about in that situation?
And that's where the UBI comes in when the IRA invests in a partnership. So if the IRA is invested in the partnership, the activities of the partnership is going to be attributable to the IRA. If the partnership triggers one of the events that I just mentioned before that gives rise to UBI, so does the IRA. Not all of the investment income is subject to UBI, remember, just some of it.
Okay. And if UBTI is present, you're required to file a 990T. So you can spend a little bit of time and just talk about the Form 990T and why we would file it.
Importantly, that's an income tax return. It's not an information return. It's an IRS form, and it's called the Exempt Organization Business Income Tax Return. Very simply, it's the actual form, the income tax return, that is used by exempt organizations and certain listed entities to report this UBI, the unrelated business income. The form specifically states in its instructions in the Who Must File section that trustees or custodians for certain trusts, and that includes IRA accounts, that have more than $1,000 of unrelated trade or business gross income must file this form.
Okay, so you mentioned the $1,000 threshold, and I know out in practice, I've seen 990Ts that have been filed with less than $1,000 on them. Why would somebody be filing a 990T that did not have $1,000 worth of UBTI on it?
Well, remember, the instructions look at gross income, and that income is reported from the K-1. That's the form that's issued by the partnership. So the Form 990T shows deductions which may give rise to a loss. Because there's $1,000 of gross income, that's before deductions, then the Form 990T is still needed.
Okay. And when is the 990T required to be filed by? What's the due date?
And the original due date is April 15th, but you get an extension. You get an extension for 6 months. And oftentimes this Form 990T is filed by the extension due date because the information is not reported by the partnership on the Form K-1 until after around April 15th.
Okay, and when do you make the payment with the 990T?
So that's due on April 15th as well. And so the information to support the amounts to be paid based on the information from the partnership, some of it is not included on the Form K-1. And because all the information may not be provided until after April 15th, the amounts generally cannot be calculated by the original due date. So oftentimes the amounts are estimated or not paid until the return is filed.
Okay, and how is the tax calculated, and what's the rate that we use on a 990T to determine the tax for UBTI?
So the IRA is treated just like a trust for tax purposes. So for this reason, the trust or individual tax rates apply.
Well, thank you, Laura, for all those answers. And Joe, back to you.
Thanks, Shawn. I hope everyone found the discussion today on the basics of UBTI for IRA holders to be beneficial. Please look for future videos that we'll be doing on more advanced topics, as well as some of the impacts of tax reform. Thanks again.